Hi guys, welcome to another video. So today we know that FOMC meeting is coming up. So we have to understand that the anticipation and what will happen to the housing market or the stock markets and the economy, so we can prepare for the things that will going to happen after the FOMC meeting. Okay. So first of all, please remember to subscribe and our YouTube channel and also like my Facebook page, and you'll be one of the first one who will receive our most updated video. So today my voice, I'm losing my voice. Yes, I'm kind of sick. I've been really busy this year because the market is doing so well. Many of the students want to learn, and my third kid is coming. His due date is on 23rd. So I'll be probably reducing my work from now on, from this week. But this really important meeting is 100% of the market is anticipating, is expecting the FOMC will go to raise interest rate. Unlike last time, we have talked about that, it's only 0.7% of those who think that it's going to raise interest rate for 2 times. So what can we prepare? So everything is about anticipation. Okay. I'll brief you guys about that. So almost 100% of us will say that the FOMC meeting, Janet Yellen will go to raise interest rate for 25 basis points, right? So if she is going to just raise the interest rate for 25 points as what we expected, the US dollar will not move at all. Ideally, okay, it's like that. So the thing is, there are two possibilities for the US dollar to go up. The first one is after the meeting, what Janet Yellen is going to say is really important, it's crucial. She's going to talk about how many times she's expected to raise the interest rate. So we have to play a game of the anticipation right after the meeting, right after the decision. So right now we're expecting 3 to 4 times of 25 basis point of interest rate for next year. So if she is saying that, oh, the economy is really good, then probably people will anticipate 5 or 6 times of the interest rate hikes for next year, and the US dollar will boom go up. And then technically 94.5 is the really optimal level. If it breaks above that, the US dollar will go really strong. Any currency will go so weak. So if you're living in United States, you should plan for travel to other countries. If not, you will invest in any FX markets, short euro, short pounds. Especially, you have to understand that December 14 is the United Kingdom the interest rate decision making is on almost in the same day, but the interest rate hike is 0.8% probability. So especially pound may come down if she's saying something like that. But surprisingly, if she is going to raise 50 basis point, which we don't expect at all, and the US dollar will go up really strong. So again, either of the case, it will break about 94.5, right? So right now I'm having a long position a little bit of the US dollar and short position of the euro. So technically, euro, the target, if it goes down against dollar, will hit the leg line, which is about 1.168, or to round up. That is the target. So right now, that's my position. And then the gold will not have, people will not hedge as much. And then, as you can see, I've drawn many lines here. And then you can see the pattern target will be 1170, and the black line, the X line here, is around 1200. So that is really the target. Okay, if everything goes well to the plan, again, if she's going to raise the interest rate for 50 basis point, or she's going to only raise 25 basis point, but in the conclusion in the meeting she's talking about strong currency, and then everything is about the same. So unless what will happen, unless that will also happen, she's going to raise the interest rate for 25 basis point, and in the meeting she's not talking about anything, saying, oh, the economy is as strong as expected, and the interest rate hike, the speed and the intensity is as expected, and everything is expected, right? I don't believe that US dollar will just stay there. I think the US dollar will come back down a lot. So that is something that will prepare. For example, if you speculate or invest, you have to understand that. So now you have to have a cut loss level for the previous strategy, or you can turn your long position to short. That is the level when it breaks below 93 or 93.5. You can short the position until it hit the target of 92.4. That is something you have to be careful of. And also, the gold will see a rebound. If that happens, that is plan B, and the target will be this line, which you see the gang C bottom. That level is around 1270. That's really, I've mentioned this level for many times. And the euro will rebound. The level will be 1.19. That is the rebound level, and you can short it, right? You can just change your position and short. That is really flexible. But if you don't play the forex market, well, you still have to understand the US dollar, right? Because the commodity, the gold, the oil will be affected, and also the Japanese yen, right? Because if plan A, which is most likely if that will exist, that will come up, then for plan A, if the US dollar is going strong, then the Japanese yen will go weak, right? Remember, the strong resistance is 114. That's really strong resistance. If it breaks above that, boom, you should buy stocks right now. So it's not about you didn't buy that stock or that index at low level, and now it's really high, so you think the valuation is high. First of all, it's about valuation. Secondly, it's about the cash flow. If the cash flow, Japanese yen, is broken above 114, everything will still going up. It's really hard for it to go down. But plan B, if plan B comes up, the expectation is all falling within our anticipation, and the dollar will go weak, and then the yen will go strong. Boom, stock market will collapse, okay, or adjust. So especially, I think that mainly the annual reports coming up in the January and February. I think that the valuation is not as sexy, the earning is not as sexy as we thought, and then it may be having a setback or adjustment in the stock market. But that is the time you should buy the stock, because in the end, in the long run, if US is going to raise interest rate, if you're doing so, China is doing so, and then you understand it's bull market, right? So that's something that you should prepare for short term and long term. And the housing market, maybe we'll adjust for a little bit. I will talk about all the assets for 2018 on Monday, okay? So right now, let's handle the FOMC meeting first, okay? So that's basically my update. If you have any comments, leave me comments in the comment box below, and also like and keep me thumbs up, and also share this video to your friends, all right? So investing be easy. I'll see you next time. Goodbye.